Yeah. Which sitting, which question? November 2017. So let's meet there. Page 69. So let's meet in page 69. Sio swali yote tulisoma. Did we calculate goodwill? Ama tulisoma tu. We just read it. So let's calculate goodwill. Your goodwill is going to catch up with us. So can we calculate goodwill? Actually, two things. There is associated. There was an associated in this question. Sure. The UPIA ilikuwa 40%. So let's calculate goodwill and also investment in UPIA. UPIA will appear in our balance sheet once. Investment in associate. So let's start with the goodwill computation. Let's start the implementation here. So goodwill. Shilling 30,000. Purchase consideration. How much did the parent pay to acquire? Hey, how much did the parent pay to acquire the subsidiary? Goodwill you only compute for the subsidiary. How much? Those who are joining is when we are starting that question. They asked a question. The November 2017, page 69. How much did parent pay to acquire the subsidiary? Nataka mnitafute. Atulitafuta. Si hata iko tu hapo, hata hajafichwa. Ijafichwa yenyewe, actually imewekwa mara mbili. Ni how much? Yeah? Well, I'm doing another question. How much did the parent pay to acquire the subsidiary? Wale mnafikiria mbali aje? Si examiner ametupea hapo vizuri cost of investment. Si cost of investment is what you are paid to acquire that company. Ati ulisema hivyo. So si shares they acquire. Number of shares are the shares they paid 5,000 to acquire the 80,000 what shares. Your route mnachukua shares is when you are told they gave out shares to acquire. These are the number of shares they did what they acquired. So the cost of investment is the purchase consideration, which is how much? 5. Was there any fair value of NCI? Not number? Not number 5. So you add fair value of NCI. How much was this? 1,500. So the total amount which has been invested by the parent and NCI is 60 what? 65. Then I want you to subtract the net assets. Net assets are there are 4 maximum: ordinary, share premium, retained earnings, and the 4th one, revaluation. Yes. So less net assets. Net assets, ordinary share capital. Ordinary share capital in the balance sheet. Just check the balance sheet. In the balance sheet, we are in Safari. Goodwill you calculate in Safari. So how much is this? 2,000. Share premium. Share premium. How much? 1,000. Revenue reserve. Revenue reserve is just the other name of retained earnings. But retained earnings, you said you take on the date of acquisition. So retained earnings. Retained earnings. Retained earnings, can you check note 1? When Safari was acquired, what was their revenue reserve, which is the retained earnings? 2,400. Check note number 2. There was revaluation. On the date of acquisition, revaluation was how much? 400. So the total net assets on the date of acquisition, can you add? Make a mark. So, addition. Addition pia mtu ana absorb. 5800. So this one is full method. Full method, you don't apportion net assets because already we have. When you have NCI and parent, you don't apportion net assets. So the difference is goodwill. So goodwill is how much? Was there impairment? So less impairment, if any. If there is impairment, you subtract, then you get net goodwill to CSFP. CSFP is what? Consolidated statement of financial position, the balance sheet. So this is what you present there after impairment. Then for associates and joint ventures, you don't calculate their goodwill. You check your investment. It's like a small company where you have investment. So you check the investment, what you have invested in that company. So say there, investment in associates. Investment in associates. UPIA. UPIA is the one which is associate here. UPIA is associate. So how much did we initially? So you check what you initially invested in that company, then any profit which comes after acquisition, the eliminator post-acquisition profit, you top up to your investment. If the investment is impaired, you less. So initial investment, how much did the parent initially invest in the UPIA? In that note 1, 1,600, correct? Then any profit that company gets after acquisition, you top up. So you add post-acquisition profits. So post-acquisition profit, parent was controlling what percentage in that company? 40. So any profit which comes after acquisition, parent takes 40, then they add to their investment. So can you check the balance sheet? What is the closing profit? You know balance sheet is closing. How much is the closing profit of UPIA? Check UPIA in the balance sheet. Revenue reserve of UPIA is how much? 24. When they were acquired, what was their profit? So that you get the post. The post should be the closing minus by that time. By the time it was acquired, how much was the revenue reserve? It was 16, isn't it? Yes, 16. So get the difference, then you take 40%, you give the parents. You give the parents. How much is that? 320. However, my attention is being drawn to this note. Can you read the entire note 4, please? Read the entire note 4. After reading, there is unrealized what? Profit. Who sold to who? Who sold to who in that note 4? There is the element of unrealized profit. Who sold to who? Eh? Who sold to who? Upia sold to? So Upia, your associate. So kuna profit they are captured in their book. So in this profit, there is unrealized what? Profit. So less UPI, it is affecting the associates. No? Yes, so less UPI, less unrealized profit. How do I get the unrealized profit? Please guide me. What is always the formula? You take profit margin. Here, the one which we have been given the 40%, it is margin or markup? Markup, because they have said on cost. So it will be 40 over 140 times half of the goods. What was the total value of the goods? 280. So a half of 280. That is the unrealized profit. 40 over 140. So we know we unrealized profit. Talk today. Yeah. How much is this? 40. So this is your investment. If parent should suffer what percentage? 40%. They cannot bear the entire unrealized profit. So parent will just take 40% of that unrealized profit. You see who a parent? 16. Yeah, so this is 16. So that plus that minus 16. This is the Helen of this one. How much is this? Huh? 1994. 1904. I think with this we can now kick off the balance sheet. We can kick off the balance sheet. Are you ready? Are you ready for the balance sheet? Yes, then let's go. Let's go and prepare for them that balance sheet. Let's prepare. So write the name of the parent. Write the name of the parent. You write Mwanzo Group. consolidated statement of what? As at when? 30th September 2017. So let's maintain one column. How come Samna? Why are you not keeping warm? Sasa hii baridi hata crocodile anashukua kwa sweta, sio? Bro, unaweza toa jacket sasa. Unaweza toa jacket. Mpige tu story hapo nyuma, lakini tulipe figures as and if they are required. If I ask figure then you don't give them now, unakuja hapa mbele. Mbona nipatie kitu moja niweka. So you give me figures. Remember we have a target of 2 questions. So weka calculator here number 4. So we start PP, but mostly you will be telling me what to do, mostly. So like PP, property, plant and equipment. Remember balance sheet is not a portion, eh? You don't even care when it was acquired. So this is 7960 plus 46 plus, what do you want me to add? There is something to be added. The evaluation was how much? 400. There is something I would have subtracted here, but it's not there. What is this? Okay. So adjust some letter here. How much is that? 25? 12,960. We proceed. Patents. Unafuata tu hiyo yao. Patents. Patents has no problem. 500 plus 840 ni ngapi? 1340. Investment in Safari. You replace with what? Goodwill. That's the bottom line. You replace with goodwill. Goodwill we have calculated and we got how much? 700. Investment in Upia, you just bring the adjusted investment. We have adjusted investment in Upia, 1904. So investment in associates. How much is this? 1904. Other investments. Kuna hiyo wameandika others. So other investments. You add 300 plus 400. Don't add anything for associates. Those are non what? Issues. This is 700. Can you add? Sorry. Yes. I used to discuss. So give me the total non-current assets. 17,604. Current assets, Helen. Why are you not giving me answers? I mean, you would have gone many harass online. Huh? Leo niko na wewe. Simlioni unataka tuende prayers. Current assets, what are you now? Inventories. Inventories, we have 1140 plus 800. What do we normally subtract? UPI, but UPI ilikuwa ya associates. To may add parent subsidiary, so you don't subtract from the associate. So UPI, yes, it was there. We don't subtract because it was related to associate. How much is this? 1940. Next, receivables. Receivables are 840 plus 760 minus intergroup debt. Was there intergroup debt at your Note 3. Note 3. Yeah, note 3. There was an issue there. Note 3. Before that invoice, what was the intergroup balance? Before the invoice, it was 100. Senior. Then they are saying parentally process invoice, like in subsidiary for me account for that invoice. So it means in the receivable of the parent is expecting how much from the subsidiary? 240. Senior. So in the parent books, receivable to 240, but to get a subsidiary, you're going to subtract how much? 140. Because subsidiary are not aware of that 100. So here you subtract 240 the entire. How much? Naona hiyo group kwa sawa. 1360. Then we have bank. Bank, we have 0 plus. It has. Cartoons of this one. 0 plus what? Plus what? What do we normally add here which is not around? Cash. Absent. Quisha. Total assets. Can you add the total assets? Sasa hiyo ni kitu ya kufanya mtu aribie group jina. Kitu kama hiyo. Ati hiyo kitu ieleweke. How much? 21? Go for. Okay. Where are we headed? Equity and what? Liabilities. So equity and liabilities. Ordinary share capital. Did parent issue shares to acquire? No. So where the parent has not issued any shares to acquire subsidiary, just pick those shares for the parent. Parent only. Copy? For that, even share premium. Share premium. Share premium, parent only. Copy? 2. Then revenue reserve, retained earnings. Retained earnings. Then you will give us non-controlling what? Non-controlling interest. and controlling interest. And controlling now, we can do it. What if and controlling to back in a retained earnings? So if you have a working outside there, you say NCI's equity. NCI's equity. NCI's equity. Were we given their fair value on the date of acquisition? You can use that route. If you are given, you just use that route. Fair value of minority on acquisition. Their market value in quotes is their capital on that date. You know your capital, yeah, wameanza nayo. So NCI on the date of acquisition, their fair value was how much? 1,500. Weka hapo. Muting. Hey, kuna mtu ameingia na iPhone. Kitolewa. Kuna mwingine na kitolewa. I've muted those iPhone people. Alright, so this is how much? 1,500. Then add to them post-acquisition profit. Post-acquisition is the profit the subsidiary made after it was acquired. Na kwa rahisi vile mtu ana terms. Angalia closing minus when it was acquired. Closing is the one in the balance sheet. So add post-acquisition profit. So NCI will take what percentage? Parent was controlling 80. So minority will take 20. So how much is the closing retained earnings, revenue reserve of subsidiary in the balance sheet? 38, minus when we acquired in note 1. Check when we acquired. What was the revenue reserve? Safari. 24. Give me the difference. Give us the difference. No. Yeah. 280. So this is 280. There was no UPI to subtract. There is no impairment. There is no depreciation. So there is nothing. Actually, naomba kidogo tutatu ndio unaangalia depreciation, impairment, UPI. There was no UPI in the subsidiary. So just add. This is 17 what? 1780. So peleka pale kwa equity 1780. We'll come back for retained earnings. Safari endele. Go to non-current liabilities. Go to non-current liabilities. Let's check non-current liabilities. Non-current liabilities. What do we have? Deferred tax. Deferred tax, please just add. What are we adding? 400 plus 0. That is 400. Current liabilities. Current liabilities. What do we have? Payables. Payables, we have 15 plus 9 minus. There was intergroup debt. No. Of how much? 140. Si wao hawako wamerekodi ile 100. So with them they subtract what value? 140. So 15 plus that minus 140. How much? 2260. Then after that we have current tax. Current tax you add 280 plus 0, giving you 280. After that we have bank overdraft. Bank overdraft is 160 plus 0, that is 160. Total equity and liabilities. Can we assume that we are accurate with total assets? Then we fix retained earnings. Exam, I'm going to confirm. Here we can confirm. So assume that it will be the same at that value. Can you fix for me the retained earnings to 1? If you fix the retained earnings, 324. So I'm told if we fix retained earnings, it comes to 10,324. Can we confirm? Yes, let's have retained earnings. Let us have retained earnings. Retained earnings account, which we said we will not do today. So what you do, can you pick the retained earnings of the parent? Parent Mwanzo. So Mwanzo, balance sheet. Check their balance sheet, carry it down. How much is the retained earnings of Mwanzo? Is the balance sheet. Okay. 9,000. So it is 9. Then for the two companies, you only take post acquisition. You don't take that one in full. You take what they got after you did what? You acquired them. So add post acquisition profits. Post acquisition profits for the two of them. One, Safari. Safari, you take 80%. Safari, you take 80%. So what is their closing? Their closing profit minus on acquisition. The closing profit for Safari is 38. 38 on acquisition in note 1, 24. Sure. So get the difference, then take 80%. How much is that? 1120. Then for Upia the same. I'll take 40% into bracket. How much is the closing for Upia? 24. On acquisition, 16. What are the final waste time? Minus UPI and realized what? Profit. It will reduce their profit. So UPI was in Upia, you remember? Yes, so you subtract. Please indicate the 40 in your books, UPI. So this minus this by 40. Is there something I'm going to adjust? Yes, that kind of voice. How much is that? 304. So this is 304. Then you remember the invoice parent walikuwa process. Hata hii kupelekwa huko. You know when you process invoice, you debit receivable, you credit the revenue. In accounting, that's what happens. Uki process invoice per system, what happens? Inaingia kwa revenue na receivable. So TOA for revenue of the parent. Invoice to subsidiary, remove it. There is an invoice to subsidiary, which is like intergroup said. It was how much? That invoice price? 100. Depreciation absent, impairment absent. Can you check whether it's balancing? Come on, balance, I can check what we are dealing. This plus this minus 100. If it can get us to your balancing figure. Because sour means 10. In that question, you needed 7 checks. The max ngapi? Eh? How many marks is that question? 14. Can you get 7? Can you get 7? Which questions, which takes can you score without struggling? Let's start from bottom. The bottom up. Bottom to the which ones? And retain earnings. No, Helen nasema you retain earnings is mwacha nje. The only issue is the student knowing that UPIA was to be left out. Ukishajua hiyo pap, upate hiyo, you should get this. Sahi ingekuja hii mtapata. Ama tuache ilikuwa na mambo mingi ya invoice. Si hiyo iko sawa? Then when we go to equity, we get this too. When we come up here, this one was having issues. Then inventory iko sawa, lakini shida inajua ikitokea hapa. Kuna student atakuwa keen to know ungecalculate and realize profit na mtu akija atoe kwa stock. You only subtract if it is UPI between parent and subsidiary. If it's attaching on the associate. So what I say you ingaribu plan yetu. Other investments ziko sawa. So ilikuwa tu kwa investment and associate we can leave, this one we can leave, this one is okay. Hiyo mngepata. Hata ushapata 8. Ushamaliza. Ushapata siku yote hiyo 14. So you can add. So from alliance anafaa ongeza hii, alliance anafaa kuongeza hiyo. Akuja hapa sasa utaongeza hii. Even this one unafaa kupata na upate current worth hii tables. So it's not something. The only problem, what is in the head of the examiner, ukuje ulete upya. Hiyo tu. Ukileta upya unapata 0. But huwezi pata 0 yote. Hebu let's mark mtu alileta upya. Mtu alipata upya atapata ordinary. Na apata hii. Na tukienda huku kwingine, gani zilikuwa 00 mpaka mwisho? Bank overdraft. Hebu angalia overdraft. Sio overdraft angepata. Na gani tena? Hapana, current asset angeongeza hiyo 100. Deferred angepata. So angepata 3 times 2, angepata 6/14. Hadi yako sawa? The other question was page 89. Let's meet at page 89. So I'm giving you 7 minutes break. You check on that question. So check May 2016. That is our last question in group. Tumesonga vizuri, yeah? May 2016, question 4, page 89. Can you go through that question as we go for the break? Then we come back. Mmaliza hiyo swali. Atiyo ni ngumu. But which one is easy for you? Which one is easy? Na kwa nini tukifanya inakuwa mteremko? Let's check. Which sitting? It says, and I read, Jamii Limited is a listed company operating in the service industry. During the year ended this, the company acquired two companies, Bora and Gema, as part of its expansion plan. The following statement of comprehensive income relates to Jamii Limited and its investee companies, Bora Limited and Gema Limited, for the year ended 30th April 2016. So we have Jamii, Bora, Gema, fine. Up to now, I don't know the percentages. Note one, on 1st of May 2015, Jamii acquired 80% of 11.25 million ordinary shares of Shillings 10 each in Bora. For how much? 18. So 18 is the purchase what? Consideration. As at the date, the share premium account of Bora had a balance of 37.50 million, with the retained profit was 37.05. So Jamii is a subsidiary, sure, 80%. Two, on 1st November, Jamii acquired 50% of 600 million ordinary shares of Shillings 10 each in Gema for 6,300. 50% is making Gema to be joint venture. No, joint venture, we don't consolidate for them. You don't have control. Where you have 50%, you don't claim control. So Jamii is the parent. So Jamii is parent, Bora when a subsidiary, Gema is joint venture. How many Jamii? Slip of what? Yes. So that one is out. Out. As at that date, the share premium had a balance of 15. The retained profit was that. The profit of Gema could even the investment should be accounted for using the equity. On the date of acquisition, Bora Limited PPE, property plant of the company, had a fair value which was in excess of the book value by how much? 390, with a remaining useful life of 5 years. So you need evaluation and depreciation. So number 4, the fair value of the net assets acquired in Gema approximated the book value as at the date of acquisition, meaning no revaluation. So here I could add. Not 4 other cross if it has no impact. There is no revaluation. When the fair value as approximated carrying amount, it means no revaluation, and that is what they are communicating. Number 5, during the year, Bora sold goods worth 6 to Jamii. Bora had marked up these goods 25. 1/4 of these goods were included. See on the UPI. So that is UPI, which you can even calculate for me without problem. In fact, calculate. Can you give me UPI using note number 5? Give me UPI using note 5. The unrealized profit. Chap. Without even wasting time, we give you one touch. What do you get? The unrealized profits. The unrealized profit, chap. UPI online wamesema online hakuna mtu amenipea UPI. Online lazima mnipee UPI. Kwanza 2017 tulitoka kitambo. What is the unrealized profit? Anataka from online. Washasikia? Waje waseme hiyo yenye umesikia. Nani yako na unrealized profit from online platform? UPI itakuja kwa mtihani, hiyo lazima. Sijaiona swali ya group. Ama hizo tumefanya, kuna swali tumefanya bila UPI. Iko almost everywhere. So it means everyone must know how to calculate UPI. Msema ni ngapi? 300. So UPI is profit margin. The one which we have given is markup. Eh? So markup, you convert to margin, it will be 25 over 1 times the goods which remain. Goods which remain, a quarter. A quarter of 6,000. So you are saying this is 3. So that is the unrealized profit, just in case. Na kama huko unajua kuifanya, please do it because it will be there in the group. UPI iko sangi in every group question. Yo sauko pata hiyo. Sauko pata. Na kwani ni nini huko unaelewa hapo? Ni nini huko unaelewa? Initially before uelezewe. Nini huko unaelewa? You don't know how to convert. Si kila siku wakisema profit on cost. Adialima, where is 1/4 coming from? One quarter ni nini? 1 quarter ni a quarter. Grace, Grace, you thought it is 125 over 100. Piga magoti chini. Tukweke kwa maombi. So wamesema vizuri 25. 25%, the percentage is over 100. And to take it to margin, in the year 25, we say you just add to the denominator. So, good. So that is okay. 3. We are headed to which note? Note 6. Okay. The goodwill arising on acquisition of the investee companies had suffered what? Impairment loss. To the extent of 25%. The group's policy is to apply the partial goodwill method. Was there a need for them to tell us they are applying partial? No. Why? They were not supposed to say. Because NCI was not stated at what? Fair value. For you to apply full, unajua mtu anafikiria full ni kitu serious. Full ni tu kuongeza fair value of NCI to the consideration of the parent. Hiyo ndio full. So if that is not there, then you are using what? Partial. Required, let's go to the required. Required Roman 1, computation of goodwill of each investment. They want goodwill in Bora and goodwill in Gemma. Can we do that? So required Roman 1. Required Roman 1. Reason that's why wengine bado wanateleza kwa UPI ni because hiyo mambo ya kukosa classes. Hii kitu itaki kukosa class, consistency. Ni ukweli ndio? Hebu mtasema ni ukweli. Nini? Online niko na issue. How? Imagine you are the veteran online. What is the issue in online? Amoni hapo juu nyingine. Mwalimu akienda break. Ngoja, nani akienda break? Mimi nikienda break. Nikienda break like napotea.
Like when you go for
na mtu eka hapa kwa nini lose concentration? You are not just disciplined because kama uko nyumbani na uko kwa dining umeweka simu pale na mwalimu ameenda break, una practice hizo vitu na anakirudi unasema ndio huyo ali light ndio wako. Mwalimu akienda break wewe pia unaenda kupiga story na jirani. Is that justification to blame anything? Kuna veteran hapo online, they cannot even come physical, they are using online and it's very perfect for them. So which one are you using? Those are the problems. Actually, online is best for some people. Even Alfred is saying, asema online to him is the best. See, Alfred knew you understand. There are some people they can't come on the physical. They prefer online. Online wants a lot of discipline. Sio ati mwalimu akitoka tu break, ya kibia kitchen. Ati mnisikilize sauti. That one you can't work with it. Goodwill. So she has just revealed what they do. Goodwill. Grace anasema mtoto anasema ako na njaa and you have to sort him out. Hiyo challenge enough. How do we overcome that one? At one challenge ya online mtoto ako na njaa. Grace, see Grace, Helen. Mtoto akiwa na njaa unafanyanga nini? Wewe ndio mtoto. Hapana tufanye Goodwill. So we are working in millions. How do we get goodwill? We start with the purchase what? Consideration. So right there, purchase consideration. Purchase consideration. Purchase consideration. I know someone who has never been in physical class from section 2 na sasa yeye anamalizia 6. Hajaikaga physical. According to Helen hiyo ni kitu ngumu sana. Female. People are different. Conducive environment. Conducive ni gani? Hakuna kuingia ndani ya blanketi. Kuna wengine wako ndani ya blanketi wakiandika. Tunasikia nilikuwa nasema yeye anafanyaka hivyo. So purchase consideration. Mwalimu amerudi umelala. Check note 1. We pick them in note 1 and note 2. Check them in note 1 and note 2. On 1st May, Jamii acquired 80% of this, or the shares of this. For how much? 18. 18 is the purchase consideration. Then the other side, note 2, 50% of 600 owner shares 10. For how much? 63. So, kuandika hiyo ni ngumu. Alafu si mtu anaweza nikaka ukisikiza radio, unaweza sikiza radio na uandike vitu zinasemwa. So hata kama Helen, hata kama hapa iko na light na unaenda na mwalimu hapa na hapa. So you can be able to follow. Correct. So there's no problem. Less than what? Net assets. And then let's check a breaks. Net assets, you take ordinary share premium retained earnings. So ordinary share capital, share premium, retained earnings. Retained earnings. So ordinary share capital, just check there note 1. You know who got a balance sheet, so they gave them. They provided them in the notes. So note 1, can you read note 1? On 1st May, Jamii acquired 80% of 1125 million ordinary shares of shilling to what? 10. So take 1125 times the 10, because here we are working in monetary value. So that is 11 to 50. Proceed. As at that date, the share premium account had a balance of 37 what? 37, 50, continue. While retained earnings was 37.05. Both note 2. On this, Jamii acquired 50 of these ordinary shares of shillings 10. Am I talking about 6,000? 6,000. Then for this, as I did the share premium account at how much? 15. As it did, the return profit was 20.85. I'm just checking of revaluation and we are done. Check note 3. Check note 3. Revaluation. On the date of acquisition of Bora, the PPE at a fair value of how much? 300 and what? 90. This one they said there was nothing. So what you do, we are applying partial. Partial means only for parent. Parent was not controlling the entire shareholdings. When you just take this minus this, you are assuming that they acquired 100%. So apportion this one here. There was no NCI. So if the NCI is not there, you don't take the net assets in full. You take your percentage. So can you add? Add for me this. Then you take 80%. So I'll take 80%. This side we are taking what percentage? 50%. So can you add this plus this plus this plus this? You can't take this and subtract. Your partial partial means parent only. Parent, you use the percentage they are controlling. So when you're using partial, you don't take the percent, you don't take them in full. You only take your percentage. But if you are added here NCI, then it means it is full. Full means you may get 100%. So you don't apportion. So what is this plus this plus this plus this? Somebody? So just add. Yes. So this one you got? Total. How are the 20? 19. 19 to 95. And when you multiply 80% times this, 15? 6. And this one, the total first, 25? 25, 55. When you multiply 47? 5. So goodwill, you take now the purchase consideration, this minus the bracket, this minus the bracket. So goodwill, how much is goodwill? So take that minus the brackets. That is how partial is done, by the way. You apportion the net assets. What do you get? The first one, 27.94. Okay. The other one, 1507.5. Those are the goodwills. 27.24. So no problem. There was impairment. There was impairment. They said impairment was what percentage? 25%. So can you calculate 25 of this, 25 of that? So 0.25 by 27.24, 681. 25, 15,075, 376.875. So total impairment, add the two. Total impairment loss, add the two, 681, 1057.875. We are done with Roman 1 of that question. We are done with Roman 1 of the question. I want us to go to Roman 2. I want us to go to Roman 2. So in Roman 2, what do they want? They want us to prepare what? Yes, please. Does it end at goodwill or at impairment? The examiner ameuliza nini? Goodwill. It ends at goodwill. I will require this one in P&L. Yes, but it ends at goodwill. Eh? What should it be? It was partial. You are parent. Minority awako. So required Roman 2, statement of comprehensive income. That is the P&L, yes. Yes. Oh, it is a must to calculate for both. Soma swali, Kizungu. Soma require. Soma to require, then you advise me. Advise me. Do we calculate for both? As per the question, it depends on the question. It depends on the one you have been requested. So here they say goodwill for each means. So group statement of comprehensive. So comprehensive, very sensitive. Any moment you are required to prepare P&L, please check financial year. Because if the subsidiary was acquired within, we only do post. So check, when is the year ending? Usiende tu kwa P&L ukwe careful. Balance sheet year too. Sure. So be careful. It ends when? 30th April 2016. Joyce, for the year to end on 30th April 2016, it must start when? 1st May. You check tomorrow. Kuna wengine wanakuja kwa nasema 1st March. Instead wana backdate. Utakuwa na 13 months. So check tomorrow. Tomorrow is May. So it means their year always starts in May. Then backdate. So 1st May 2015. When did they acquire Bora? I want to check if there is a subsidiary acquired, any company acquired within. Bora was acquired on. Check additional information number 1. 1st May, isn't it? So 1st May, so Bora is a whole year what? Subsidiary. Sure. It's a whole year. It was acquired exactly at the beginning. So tick, no problem. Go to Gemma. Gemma was acquired when? 1st November 2015. Huku katikati, huku ndani. 1st November 2015. So Gemma is a joint venture, fine, but maybe tutahitaji vitu zingine kama kidogo kuhusu. In case we want any income and expense of Gemma, we'll consider how many months. Can you count from November to April next year? 6 months. November, December, 2, then 4. So Gemma is 6 months what? JV. 6 months joint venture. But you need to know that associates and joint ventures, we don't consolidate for them. Why? Why don't we consolidate for them? Why is the parent restricted from consolidating for the items of joint venture and associates? Huh? Yes, the parent lacks what? Control. You only consolidate for what you control. So control only exists at 50 plus what? 1. So 51% and above. Below 51, you are not allowed to. So in the consolidation, you only concentrate on the 2. So andika hapo, Jamii Group. So ukiona P&L, you be careful, eh? Yes. Jamii Group. So have that. What is the issue? Shida ni gani? Mwalimu anapigiwa simu. IT. IT ilikuwa jana. You know some people think we are very watch movie na hilo. You went about Sahara. They are not aware. So we are lucky. Jami full, Bora full, Gemma out. So, so revenue. Labda online leo wanashangaa kwa nini Helen apeani figure, so pia wanetulia. Helen leo ako. Give your answers. So 102, 180 plus what? 52, 800 minus. Someone tell me what we subtract. Intergroup sales. Hizo goods walijiuzia unatoa. There is nothing like that. So intergroup sales, how much did they sell regardless of whoever sold? Not number 5. During the year, Bora sold goods worth 6. How does it get to the Oh, year 6. So this plus this minus 6. 148 and 80. That is the group revenue. Then we have cost of sales. Cost of sales. But then umependa so far. Naona ni kama mpendi P&L sana than compared to balance sheet. Which one is better? Tuombe wale balance sheet. So it's good when you know your weakness. Do you capitalize on your stronghold or on your weaknesses? Huh? So the weakness. So it's good you know where your weakness is before the big day. So capitalize on your weakness to back up the stronghold. We say balance sheet if you're not. So kwa perspective unatafuta tu balance sheet. Alafu wao wanaleta pia so 76, 635 plus 36, 990. Now, hapa ndio watu wana cost of sales inapelekanga watu mbio kidogo because of something very small. There was intergroup sale of how much? 6. You know, intergroup sale is a sale to one group member and the cost of sales to the other group member. You would have record come a purchase. No. So it was 6, but how much was the unrealized profit? Unrealized profit was 300. So it means the cost which remained should be how much? 57. So the intergroup cost of sales, you need to subtract 57. So this is how I always advise people to do it to save time. Just say here minus the 6, this 6, plus the unrealized profit of 3. It is different. Minus 6 plus 3 is minus. Minus 6 plus 3 is minus 57. It's just the same as. Okay, what I'm trying to restrict, instead of waste time. Unajua hizi seconds umetumia hapa ni mingi sana. Uende huko nje at 6 plus minus, then you come here you say minus 57. Just whatever you subtracted here, subtract it here, then add. You know when you add unrealized profit, you are reducing 6 to. Yes. Then finally, depreciation. If depreciation is there, depreciation is always classified in cost of what? Sales. Was there depreciation? I think yes. Number 2. It was 390. Revaluation was 390. So depreciation will be 390 divided by how many years useful life? 5. Yeah, we are working in thousands. The thousands are millions. So it is 390 divided by 5, giving you depreciation of how much? 78. So depreciation is 78. That 78, don't bring it in the P&L direct, classify it in cost of sales. So you add 78. 78 is depreciation. So most students again wanataka vizuri mpaka hapa kwa 300, then they forget about depreciation. Ni pepa gani mnaanza nayo? FR ama inaanza na law. So law, then FM, then FR ni ya mwisho. So that is better. Ni better. Ama inapata kama mmesharibiwa mood na hizi zingine. If you miss, zero. They don't mark those workings, they mark the answers. Kama ni hizo QA na FM utapata because they mark procedure. Yeah, they mark the answers. How much is this? Yes. Where are we adding depreciation? The cost of sales. Where do you want to add it? Oh. Yes, it's an expense. It should be subtracted. So it's subtracted against what? Subtracted against what? Revenue. It's an expense subtracted against revenue. Cost of sales, the revenue. For published, where were we classifying depreciation expense mostly? That's the way to classify. Classifying means you know depreciation is an expense, cost of sales is an expense. So you are grouping the expenses together. Depreciation is an expense. So you know group is prepared in published form, but that's something which maybe I've not told you. Group is presented in published form. So things like depreciation, they are classified as part. They are, you know, if you are adding, yes, so David, umeona nimepewa na online Karo 108003. Ama 108003. So gross profit ndio tumetoa kwenye kwa na si ati kila siku ukiona depreciation lazima we are classifying. So gross profit ngapi? 4977. Proceed. Proceeding, I want you to check for me. Kuna investment income. Hiyo haina shida. Investment income. What plus what? 584 plus 60. How much? 644. That is an income, so you add. Please take seconds. Go back to the format I gave you for P&L. There's something I want you to check because it's coming up for the first time. Check the format I gave you for P&L. The format you wrote for P&L. Just check. I have checked that P&L keenly. After gross profit, you are seeing what? Other income, share of PAT, profit after tax in associate stock, joint ventures. So joint venture and associate, they're small companies. We don't have control. But when they declare profit and dividends, we take our share. So they appear. Joint venture will appear here. See, it completely. It will appear here once. You bring your the profit, the net, then final profit. Si kama uko na shares hapo Safaricom, their final profit, hata kama una control 1%, you are entitled to that 1% of the what? Of the profit. So you come here and say, share, you inakuwa free mark, share of JV's PAT. you will check 50%. How much was the JV's PAT? So you check the profit after tax, their net profit after tax. Check in the P&L. When I check profit after tax, I'm seeing 1365. Have you seen it? Yes. So 50% of 1365, but we can't take for the whole year because it was a joint venture for how many months? 6 months. So you take 6 over 12. It was only 6 months all. So you take in a worker free tick, by the way. You just check the profit after tax of the joint venture or associates times your percentage. If it was within the year, your portion. If it was full, no problem. How much is that? We have to finish this question. Then now we are good to go. 3.1. 0.25. Eh? That is also an income. Proceed. Proceed. After that, we have what? Distribution. Okay, what a distribution from Jenny on our working Ainanga. So it's a matter of addition. What plus what? 12, 8, 10 plus 72, 60. How much? How much? 20, 70. Proceed. Admin 720 plus 600 plus what? What do we have to admin? Oh, it is finance cost. Now it is 779 plus 4850 plus what? There is something we're supposed to add. Impairment, correct. Impairment 1057. The total impairment. Check your total impairment. 1057 point what? 875. This is the impairment we calculated. So impairment is classified as administration. Whatever was said, we are very serious. So can you add? I want you to be in a situation whereby unasema wakianguka, nikianguka wameanguka. That one means what? You must pass, ndio? Yaani ukianguka Kenya yote wameanguka. Chochote waelewacho. Lazima wewe pia unafanya nini? Umeelewa. See, because you know this one, people must get, anybody who attends must get this one, distribution. So isikwe watu wakipata distribution, wewe hujapata. Wakilemewa na vitu ngumu, wewe pia umelemewa. So umelemewa, hiyo ndio kulemewa hard and easy. Then now that is dangerous. But kama uko sawa na wao kwa easy things, whatever people are getting, you are getting. Kwenye wamelemewa uko pamoja, si lazima upite. Because at the end of the day, we must have people who are doing what? Passing. So make sure the obvious, when people are getting the obvious, you get the obvious. When they are getting challenged, you are with them together. That is okay. But when people are getting obvious, you have a challenge. When people are having a challenge, you have a challenge. That is dangerous. How much? 13. 6.875. Finance cost. Hata finance cost isipokuwa ile swali ya jana kulikuwa na intergroup interest. Hainanga maneno. Inakuanga cool, eh? Hainanga story, just add. How much? 720 plus 13. 1320. Well. Kuna hiyo. Sinimo. Why do you want to confuse elders? Profit before tax. We shall finish in the next, give me maximum 10. Maximum of 10 will be sufficient for us. There was no what? There was no JV, there was no associate.
Na ile ingine ilikuwa na associated ile loss ya 150. We were not required to prepare P&L. We were doing balance sheet. You remember? So, but if I was doing balance sheet, they made a loss. Your loss will get it up. We help them in share. So PBT will be profit before tax. What confirm? 6. You get the same. So income tax. Income tax in a free tick, by the way. Income tax. Can I tell you what is hard in this question? At the examiner study, wamefikiria wamekushika walete njema. Ukishajua njema inaachwa, you are safe. Hiyo tu, that is the catch point. There is nothing. So income tax you earn. We had what? 1530 plus, giving us 26. PAT, profit after tax. Profit after tax, how much? She was here. 4265. Continue. Other comprehensive income. Other comprehensive income. Other comprehensive income, there is what? Revaluation. The revaluation is how much? 530. Bottom single line. Total comprehensive income will be how much? Total comprehensive income 47. So we want to share this profit. Online, who was logged out after class, we have to say some important issues. Very important. So you say profit attributable down there after the single line. Make sure umefunga. Kuna wale watu anti wataka kufunga hizo vitu. Profit attributable. Profit attributable to. Okay, I assure you, you know group is compulsory. Unaona hiyo same language wanatumia hapo. Ndio utaona kwa mtihani kwa hizo notes. During the year, sijui who sold to who. Hiyo. The fair value was in excess. Goodwill was impaired. What hiyo the same story ndio mtapata. Hakuna na kitu kingine ati sasa serious. Aya, profit attributable to parent and NCI. We want to give them the profits. We share to them. So it's very simple. You start with NCI. So I have a working there. NCI's profit, that's the last working. NCI's profits. So tumefanya maswali nne. In fact, what you do, we hata usisumbue na vitu zingine. Watu wengine wana inbox. Mwalimu, I've seen a certain question in group, very dangerous. Bana, wajana hizo zingine. Wewe kila siku ukitaka kusoma group, repeat this 4. If you repeat this 4, you might not be, no one is 100%, but utakuwa at least 70%. 70 inatosha. You will be able to get 15 over 20. Yeah, so hiyo 5% yenye inapotea, you una confuse na hizo maswali zingine. Wachana hiyo 5 usekiwa 15. Instead of being confused na hiyo una panic, wewe soma hizi kila siku. Tutaki kusoma group, just repeat this once every day until you are convinced you can understand them. Kusha. So usijisumbue na vitu mingi. Haya, NCI, they take PAT of the subsidiary. So what is the profit after tax of Bora? Minority wanaishi wapi? Kwao ni wapi? Subsidiary. Kwa kina NCI ni subsidiary. Can I surprise you? Do you know these things are not hard? By the time unafika Sec 5, you be wondering, now what is this? What was even hard? Kama sahi, after this class, naenda section 1. Wacha niwaambie sasa ile kitu wameniambia na wasumbua. Wanaambia mwalimu atuelewe depreciation. At straight line, how do you charge depreciation? Ati wamelemewa. Yes, you remember those days when you used to bring me problems? Ati what is the difference between straight line and reducing? Because walikuwa wananikasirikia hizo story. Sahi, is that an issue? So that's how it goes. Mkienda huko utaona now what is this? Because unajua kuna advance FR. Na group iko huko. Hii nime advance like 3 times. So utaona sasa hizi ni revision secretary sahi hata nitarudi wafunze. So they are not hard. Ni wewe unaona zikiwa ngumu. It's not hard at all. Just concentrate. Na concentration means ukiona 50 and below ignore. Sasa hiyo ni kitu ngumu. Na huko kiambiwa class 7 atuone ukipita. Azulipita. Hata hii ni rahisi. Haya, what is the PAT in Bora? 2070. 3 obvious items which we normally adjust. UPI. UPI you only subtract kama subsidiary ndio waliuza. By the way, who sold? Ndio nimalizana na hiyo. Check note 5. So Bora waliuza. Their profit is affected. So less UPI. UPI was 300. It will affect them. Impairment, I will not subtract because it was partial. NCI never participated in goodwill computation. Sure. So less impairment. Impairment, you only less if it is which method? Full. So they never participated. NCI never participated in impairment determination, but there was depreciation. There is an asset of Bora which was being depreciated. Depreciation was 70 what? 78. That one you have to subtract. So get the good profit of the subsidiary. This is the adjusted profit of the subsidiary. NCI will take their share. 1692. Therefore, NCI will take 20%. 20% of 1692. So 20% of 1692, I'm getting 338. Point what? 0.4. So minority goes with 338.4. So it means parent goes with the difference. Difference, you take this. Hey, check this. The total, not this one, sorry. The profit for the year is this one. So you take this one here, 4265.375 minus what has gone to the NCI, 338.4. So parent goes with the difference. So the difference is 4265.375 minus the answer. They go with 39, 26.97, giving us a total of 4265.375. Then funga hiyo single line. Then again, other comprehensive, they have to share. So other comprehensive income, parent takes 80% of that revaluation. The 530 was only the books of the subsidiary. So this 530, it was in whose books? So the subsidiary. So parent will take 80% of that 530. Noisemakers will take what percentage? 20 of 530. So 80 of 530, 424, 530, answer 106. Full stop. Now, Grace has said, no, explain impairment full. Full method. Grace, but somebody don't know spell. Impairment full means that minority participated in goodwill computation. And how do they participate? When do they participate? If they were provided at fair value in the question. Kama zile ile swali tulifanya Grace, ile ilikuwa na fair value of NCI. So when we were computing goodwill, we started with the purchase consideration of the parent plus the fair value of NCI. So in that case, they have participated. They participated in goodwill, they will also suffer the impairment. So Grace, I hope you have understood that. So we are done with P&L. How many marks? 12. I need 6 ticks. Alfred, parents' profit share. Parents' profit share, you take, we are taking profit after tax for the year, exclude comprehensive, or comprehensive. So you take this for the year minus what we have calculated for NCI. NCI we got 338.4. So take this minus what we got, then you get to the parent. So Alfred, I hope you have also understood. 6 ticks. Can you get 6? I know what you will get during exam. What people will be getting. So what we will be getting if you also get. People will get this without problem. I know. They will get this one. Even this one people get. This one they will get without problem. I can't rely. Upper impairment, neither bigger checker because of goodwill. Finance cost they will get. They will get income what? Tax. Then the rest they will not get. 1, 2, 3, 4, 5, 6. Those are the obvious for someone who wants peace. Then goodwill is how many marks? 4. Huh? Let me mark for you goodwill 1. Goodwill, I know what students will get. It was 4. So we need 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. Maybe this is 2, 2. So 2, 2, 1, 2, 3, 4, 5. So any 2. No, any 4 at a half. 1, 2, 3, 4, 5. Any 4 at a half. Students will get this. 1, 2. Hapa tunapata yote. Si kila kitu ilipewa. Hii hapa unapata 2 yote. Even this one 1, 2, 3, 4. Hiyo students wanapata. Hapa unapata yote. Because all those things are provided. Here unapata 4. Hapo unapata 12 without struggling. Hiyo ni ngapi? Hata unapata 16. Nini hiyo unataka? Alright, let's do this one. Hiyo imebaki ni how many marks? 4. It's easy. It cannot take us more than 4 minutes. Statement of changes in equity. That is easy. So write for me there statement of changes in equity. Statement of changes in equity. Grace, we have not confirmed whether you have understood that thing. Statement of changes in equity. So equity, tunakuanga nazo hizi: ordinary, share premium, retained earnings, and revaluation. Lakini kwa group, share premium and ordinary, they don't change, they're just constant. So the ones you are always required to check is just the 2. The retained earnings and what? Revaluation. For parents only. So our Grace partially means you can go and check, then it will be okay. So right here, retained earnings and revaluation. So for group, let us use Obili. Published, sorted. Then you give us the total. So balance brought down, we were not given anywhere. For the year, only parent is letter NCI. You only bring the ones which relate to parent. So can you check profit for the year attributable to parent? Tulipata gapi? Profit for the year attributable to the parent. Tukunazo hapo. 39, 26.97. What about revaluation? The other comprehensive 424. We have distributed them there. The last bit of P&L. So this plus this comes to. So balance carried down
Total comes to 43. Yes, Ifika. Well, sure. Itafika. 4350. 0.97. Correct. Question. Yes.
Means if you didn't get your profits correctly, you miss the formats.
Sure, you missed the format. You're not supposed to get everything. Examiner anajua mtu ameenda vizuri atapata hiyo kitu yote, hiyo swali yote unaweza pata. So lazima restrictiwe kidogo. Usifanye kazi ionekane hujui kuset mtihani.
Tupatie format ya list statement.
In full.
You say you have
Niliopea kwa published, but kwa group hizo mbili, evaluation na return earnings. Hizo ni zina keep on changing. Yeah, just those two. Hakuna ingine. Kilisho na mwanzo. Waswahili waongee. Kilisho na mwanzo. Lazima uwe na mwisho wake. Even if we do 200 of questions in the group, kama hujaelewa hizi nne, bado tutakuwa tuna waste time. Unajua lazima tuseme ukweli. That's the truth. So and me I'm urging everyone. Unaona hizi tumefanya. The time remaining, ama mko na time ya kusoma vitu mingi. Sasa ndio mtu amebebana na encyclopedia. Ile kubwa. Mwalimu I was going through a certain question. Hii hata wamepata ingiani. Wacha na hizo vitu. Hakuna kwa mtihani utawaisikia examiner akisema give us answers to the following questions. No. They normally say attempt the following questions. So you just have idea. Idea in every what topic. So najua sasa watu wanasema wacha tuone anasema which ones are coming. No. Me I don't like predicting, but obvious group is coming. That is sure bet. Lazima wa examine as usual. This one as usual. Partnership, wacha nisijifunge, 99% wakijaribu miss partnership. Akinyi wakijaribu miss utapata branch. In case they miss partnership, it is branch. Kuna kubahatisha. So, mnaitanga hotspot. These are hotspot. Usipeleke miguu zako kwa mtihani kama hujaangalia hizo. Those are the hotspot. Others, semi hotspot. These are semi hotspots. Agriculture, professional. Unakumbuka professional, ile lawyers, what doctors and something, professionals. Those are semi-hot spots. Below semi, others which you need to check. Leases, angalia mambo ya lease. Angalia leases hapo. Hizo zingine pia upitie, lakini this is the exam hapa. Here ikienda tu vizuri utapata those four. Ikiwa hivyo. Na wakuja wachukue moja hapa na wakuongezee na theory. So theory, group theory hapo juu, format 16. Published hizi weko na theory, hiyo inakuja kivyake. Partnership inaweza kuwa na theory 6 marks 14. Ratios pia lazima ikuwe na theory hivyo. So that means unaona hiyo handout niliwapea maximum 32 marks, minimum 20. Yes, that handout I've given you. At what? And then when you unakatukingi hapa ujui kuna handout watu wanasoma. Yenye imebebwa hapo kama Quran, ipo hapo nyuma. Uko nayo? Soft copy, so you can come for hard copy I have. So make sure that theory handouts umesoma kila siku. Every day. Kama unaweza scan ikuwe kwa roho. Hata nikuje niwapitishe kwa hiyo theory. Hiyo hata mkiandika hata tukisomanga watu wanalalanga. Hakunanga tofauti. Mimi nasema nikikaa kwa nyumba nitapitia proper. So enda upitie proper. Soma hiyo handout. Hizo mambo ya adjusting events, non-adjusting events. Hizo stories ziko hapo. What is provision? What is contingent liability? Investment property, borrowing costs. Hiyo yote ziko hapo. And they will examine. Probability is 20 marks, maximum 32 on the higher side. So make sure. So now, unajua sasa tena watu wanataka kunisumbua na partnership. Partnership is in 3. There was amalgamation, dissolution, and conversion. In the new syllabus, they removed dissolution and amalgamation. We are only doing conversion. So ukiona kitu kwa past paper yenye hatujafanya kwa class hiyo ilitolewa. Including last setting they missed students waleta dissolution. Watu walipiga kelele so they can redeem themselves. They can redeem themselves by now bringing conversion, which is good. Lakini wa tighten, wasema si walipiga kelele ya dissolution. So walete conversion but wa tighten, but hata wakitighten all dissolution tulifanya conversion. We did 5 questions in partnership. Of those 5, they will bring one concept. I don't know which one, but they will bring one concept. So you, for now, what you do, leave alone any other material. Just concentrate with the questions we did. Just repeat. Then it will be okay. If you don't do all the questions, you have yourself to blame. You cannot pass a file if you don't do all the questions. Sometimes hii paper inakuwa mbaya, by the way. Kina umananga. Unapata kuna swali like last semester. They brought a wrong question in partnership. So what did they decide? Anybody who attempted was to be awarded. Then unaenda hapo unasema time was very bad. Sikufanya partnership. Na watu wamepata kitu ya ku. You get? So if you attempt, even if they are wrong, you will get the 3 marks which people are being given. So you must do all the questions. So how do you structure the questions? Ikiwa hivi, kama hivi kuna group published partnership ratios. Which one do you start with? Ikiwa hivi, which is the first question to start with? Ikiwa hivi, the question you start with is this one. You start with partnership. Partnership inakuwa katikati, ngumu, rahisi, hapo inakuwa balanced. So you start with the question which is always balanced. You start with partnership, then 2, you go to the easiest question. Somehow, lazima uone swali rahisi kwa hiyo karatasi. Itakuwa imeukalia zote. So usianze na rahisi sana. You start with semi. Then you go to the easy one. The easy one probably will be this one. Then number 3, you do group before your mind is diluted. Before once to scare 1 hour, you rush to this one. Then this one should be 4th. Then unafanya hiyo ingine. That is how you go about it. Group should be number 3. So you start with the question you unaona iko katikati, not the easiest and not the hardest. Katikati, easiest, then group, then balance hiyo ingine. Remember, each question takes how many minutes? How many minutes? 36. If we take 36 times 5 questions, yes, it should be 36. 36 by 5. How many minutes in total? 180. 180 divided by whatever? 3 hours. So usiende hapo ati mimi kwa class ndio nilikuwa naonyesha watu group. 1 hour imeisha. Wewe bado uko hapo unaanguka. So what you do, exam starts at 9. So if at what 9? So even behind your timetable you can write in pencil. Na ukue na saa 9 to 9:36 I'm doing my first question. Ikifika 9:36 wacha hiyo swali. Vitu ushapata already uko na 13 over 20. Now then you got it. Instead of concentrating, now what you can top up on the 13 is just 3 ticks. Now wacha hiyo swali nyingine. 9:36, hebu muongeze 36 again. It is 10:12. There about. My second question. 10:12 to 10:48, I'm doing my third. 10:48 to 11:20, my fourth. 11:20 to 12, I'm doing my fifth. So unajipanga, unajiprogram. Si ati sasa umeshika swali moja. Unafanya na 50 minutes. Ukimaliza una cancel ati you have realized something has been rejected. Ume cancel 50 minutes. You are starting afresh. Now that one now. Unafanya kubaya. So panga your time. So ukipanga your time, that is where you will realize that you are wasting time with computing, goodwill, retained earnings, and what? And NCI. Hizo wachana nazo kabisa. You will realize you will utilize your 36 minutes properly. Umeelewa? So at the end of the day, unafanya maswali zote. But at mwalimu, I did 3 properly. 3 properly na 3. So it means your paper is going to be marked over what? 60. You are hanging in the way in balance. Grace, what is the issue with ratios? So I think that is it. Grace, ratios, Amo, you are saying it should be there. So just play. So my assignment to you is that theory, you read it properly. Then from today up to Wednesday, make sure we concentrate upper for hii hotspot. So then hiyo ingine uende kwa semis hivyo. Grace amesema ratio is the easiest. Wakileta ya shapita mtihani. Amen. So we have to end. Actually, kitu tungefanya hata the whole year. Campus hii inakuwa divided into 2. The whole year, academic year yote inafanya. So we have really tried. And also I have to say something very important. I know we have, I don't know, but maybe we have teachers. Tuko na teachers around. So tunaweza kuwa hapa na walimu. Yes. So teachers knows how teaching is very difficult. It's not easy. It's not all about knowing what is to be done. It's not easy. You think it is easy? Sometimes unasimama hapa, Grace ako huko anang'ang'ana kuona NCI, so lazima afunge macho moja. Wewe ukiona hiyo unafikiria ni wewe unafungiwa, answers zinapotea. So it requires a lot. So sometimes lazima nikanyagie Helen kidogo, ndio tande amke. Nikanyagie ule. Kukanyaga means lazima niongee kitu. Unafikiria watu wamekucheka. So it requires a lot of balancing. So what does that one mean? If there is something I said and you felt ilikuudhi, it was not out, hata siwezi kumbuka. It was just part of moderation. So kama uliona kitu nilisema ikakukasirisha, I ask for forgiveness. Me, I have nothing to forgive because, to be honest, the class was so nice. Hata nitawamiss sana. But I pray you pass. We meet in section 5 for advanced FR, God willing. So all the best. I wish you all the best. Revolution and parent figure. Alfred Aikukwa. But from now onwards, my number is in the group. If you have anything, press, just call. You're going to speak for your past paper. Just call me, you ask. Texting sometimes, just call. I work well with the call. It's up to 12 a.m. Yes, that is the time I sleep. So I will be able to answer. So, unaona venye umekaliwa, kama unaweza ingia kwa roho ya mtu mwingine, utapata hata pia kila mtu amekaliwa. You're not alone. This thing, the time is, you know, this thing we used to do with 6 months. Now we are doing it with 3. Hata hiyo 3 aishi vizuri. So everyone is feeling the heat. So let's just balance, then itakuwa sawa. So I wish you all the best. In case of anything, thank you, Grace. In case of anything, just contact me. I'm in the group until December. After the solve group. Sawa. Thank you.